guys, and glad to have you on board again today. New update because quite some things have changed. Yesterday the S&P 500 had a little bit of a dip. Still we've somehow managed to recover by the end of the day. But something happened, and yet Apple closes near the low points and all of those things. So big guys are having quite a bit of a move. So even though we still haven't yet a bloodbath situation into the broad stock market, some of the headliners are flashing some red lights. We're going to see today how big of those red lights could be. Is there really something to worry about, or is this just a short-term volatility burst? That will tell us more about what to do next. So this is something for experienced traders, of course. Remember that for anyone else dealing with the stock market now, until I tell you to do so, you just don't give a fuck. There's not enough volatility in this market. You just make sure that you don't have overexposition to stock, just because these could turn out to be heavily much more volatile than they are now. But until then, this is just raw speculation and feelings I have, being pretty much uncomfortable with being just simply going bullish in the stock market without a backing plan. More importantly, because yesterday Janet Yellen just said something I definitely think is worth noting, is the fact that she thinks that the yields must not remain that low, otherwise we will overheat the economy, which is definitely what I've been telling you for quite a long time now. So this feels pretty great to see an US official actually mentioning these things. That means, first of all, they're smart, because that's their fucking job, and I'm not supposed to be just doing it for them. So the fact that they see overheating problems, or at least overheating problematics in prices, means they definitely having a look at stock market. And of course we're overpriced, and of course if they keep it pushing that way, this will have dangerous implications for financial stability. So of course they're introducing the narrative, but what doesn't really make it straightforward is the fact that Janet Yellen says yields will have to rise, when on the other hand, or that yields can stay the way they are, okay? And in a second stage we've got Jerome Powell, which is basically saying not the opposite of it. It basically, and I had to double check on this, has always been clear about the fact that yields will remain low. And well, that gives us pretty much the shaded gray areas to work around. So this is where the narrative is going to be focused within the next few days. Janet Yellen saying that yields at the rate they are right now is not going to happen longer. But in the same time, yields will remain low. And you've got all of the in-between areas to work around. This is subjective enough so you can let your imagination work around. Of course, this is going to be the center of the maze for the weeks to come. Now that we are nearly reaching out the end of earnings release, this is going to be the new topic that will drive investors' speculations. So how big of a rate increase are we going to get? Is it going to be a Greenspan type of rate hike, in which we just basically send a message directed to the stock market only, which means the bond market will just not drive crazy but keep recovering slowly but steadily, when in the same time we could eventually get a roaring stock market to the downside, because of course we've overpriced every fucking thing out there, and it might be an appropriate time to start flushing out the speculative behaviors. So that may cause a violent pullback, 20 to 25% if the market really goes on a panic selling, which means, in my personal opinion, this is not the end of the world. Flushing 20% of current market valuations would just make them back to normal valuation regarding the current situation. On the opposite hand, of course, the question is, can we actually handle this? We have a credit bubble below our feet, and as long as the bond market holds on, I think we're going to be fine. But of course, these questions, because we never know for sure, are we going to be able to sustain the credit bubble, or is it going to burst right into our face, creating a dangerous dip that could be bigger than 25%? Okay, so we'll discuss about that later on. Then first of all, Dogecoin, of course. So today is the day I'm going to have to introduce another thing. We haven't yet made the course about that, but I kind of told you that there will be an additional bias in the in the trading lesson series, we've got the first ones, the fear, uncertainty, and impatience biases. Then we've got the trend biases, mostly those who have bullish biases, bearish biases, and contrarian biases. And I kind of introduced the fact that down the road we'll get management biases. That is for expert traders only, those who have management portfolios to manage. They will be management biases, and these are much more complex because you got kind of 9 subdivisions of these biases, one of them being pretty much at risk now for those who will suffer from it, and I am on one of these, which is the vigilante bias, which means basically you're going to feel like things are not normal, they shouldn't be going down this road, this goes way beyond any rational stance, and you're going to be willing to fight against it. That's exactly what I'm doing now with Dogecoin, which is just shitty, crazy fucking parabolic assuming shit. And this thing just basically worth nothing just 4 months from now. And now it's the new thing. It's the top fucking 3 in cryptocurrencies. I just can't understand that. That makes no sense. My vigilante bias just drives me crazy. So I do what I have to do because I'm aware of that bias. I'm not fighting against it. It makes no sense. You are who the fuck you are, and you're not going to change anything. But you need to be able to have some securities facing the fact that you have a bias. You're going to have to work around it. Just make sure it doesn't impact your trading decisions. I know I am going to be under influence now with Dogecoin, just like I was with Tesla. Well, how do? I simply delete the thing. So in my watch list, well, no longer Dogecoin. As long as this thing hasn't lost 30%, I don't even give a fuck about its price. So I clearly simply deleted it. So it's not even a thing to me because it's gone way beyond any rational stance for me. It's starting to rise my biases. So I just can't work myself out of these biases. So I just delete the asset itself so I don't get temptations over trying to restore justice. Okay, so vigilante biases, you don't have the entire course about it, but if you're getting emotional and if your natural biases fights against current Dogecoin prices, well, Jesus fuck, just get it out. It's stupid, and stupidity has just absolutely no limit. So this is not where you want to spend some money. They just took me $500 yesterday on a margin call stop loss on my futures account. Hopefully I just had $500 out there. And, well, of course, I took more money to the upside, so it's not a financial loss. It's just that I know I'm going to get stupid with this thing, so I just delete it, so I just don't get stupid. Okay, so delete the temptation when you know that you're not really able to handle this. Okay, these are biases. These are things you don't have control over. Otherwise, it would be way too easy. Okay, so that being said, delete Dogecoin, but talk about the rest. I mean, Bitcoin is definitely not stupid. As you can see, this has nothing related to Dogecoin. This is where we got decent pricing. So 4-hour chart gave us a third range boundary. As expected, it is rejecting inside the resistant context, which means we're dealing with the probability to get there, but still has absolutely no trend signal. Could be a little bit of a divergence, but actually it feels more like a double top to me. We didn't really flush away to a high point. So the thing in here is that we are rejecting inside the context, but without a signal. So there is still a reasonable probability for us to get there, but like I said, it mostly, I think, depends on what the stock market may do. Otherwise, I think, well, think of it as a dumb zone. This is where you want to sell, this is where you want to buy, this is the minimum level to buy, this is the minimum level to sell, and this is the no-go zone for stupid traders only. So just make it plain and simple. What have I done yesterday? Short selling, profit taking, end of the story. That's what I did 2 days ago. So this is basically just as simple as that. I'm selling in here, buying in here. I'm going real short term when it is these prices, which means this is the minimum price to buy. So I'm willing to buy the dip in here, but I'm just buying and profit taking anytime I have some red flags and I'm really going short term. The most attractive prices are going to be 51K or 61. These are the price I'll be willing to hold for a few days. These are the third range boundary limitations and the minimum risk reward ratios to keep it overnight. Otherwise, on a day-to-day fucking basis, I'm in, I look for opportunities, as long as there's enough volatility, I buy, sell, end of the story, take the profits real quick. Don't go bold with the position sizing, and if you end up taking a stop loss, don't cry for more blood. Just move on to another day, and that's as simple as it is. I'm basically grinding my way into making $150 a day. Just make it without risk taking. I'm not trying to take the highest amplitudes of a price, just trying to get a safe $150 a day, which means out of a 2 months from now, I will be doubling my asset, my available cash, and that's just the goal, okay? Of course, I'm not going to be making profits every day. There's probably going to be days with losses. That's inevitable, and that's pretty much all about it. Though I'm going to do this day-to-day trading on the Bitcoin, because this is where liquidity is. This is certainly not a DOGE shit. This is pretty much the thing that now I'm going to do this. Day trading on the Bitcoin as long as volatility is sufficient enough to do so, and I'm going to look for arbitrage trade on all other coins that may provide either third range boundaries or final reversal structures and all of those things, or divergence pattern and so on. So I look for those trade for opportunities to increase the gains I have, the cash I have available, without taking too much risks. Okay, so that is the current stance, and I'm going to stay in there for as long as necessary, because I still don't think Bitcoin is not going to break 65k anytime soon, just like I think 41k still has a limited potential. So I think within the next few days, the most likely probability is to stay the fuck in there with a boring day trading situation until we find the strength to either go 61k or try 51, where I think in a first attempt there could be a buying opportunity. That requires signals, of course, but these are the price I care. Okay, so 61, 51 for a bit of a swing trade opportunity, and that depends on the signals we'll get. 4-hour chart seems to be the reference for this. H1 for the 51k. Okay. So that's pretty much all about it. H4 signal if you want to trade 61k, H1 signals on the context or below the context if you want to get for the 51k support, and that's pretty much all about it. And if 51 doesn't provide a tradable signal, then that's 41 for a 4-hour signal in here as well. Well, that's pretty much all about it. Now let's have a look at the stock market. So S&P 500 has gone down yesterday. Whoa, hell of a bloodbath. No, it wasn't. And actually, just make it plain simple. If you zoom it out a bit, well, you'll figure out that we're still right in the middle of, let me just have a look at SPX basically, okay? So if you have a look at the daily chart, SPX, the cash market, that's another lower shadow candle, which means no one gives a fuck. We're still right in the middle of an absolutely uninteresting and very low volatile area, which means either we are in a raging bull market and the low volatility is the sign of that bull trend to keep going forever, or this is the plain bullshit everyone is into, in the reason why the trend has already gone on and we're limiting the potential, so we're on the verge for a massive drawdowns in prices. No one sees this, but the thing is, of course, everyone just settle for low volatility. So this is the level of warning for experienced traders. Means yesterday we had a bit of volatility, so today we need to be in front of our charts to try figuring out if people are going to sell the third range boundary or if we're going to extend to a 1-to-1 ratio. The level I care about is approximately 4,300. Because if we get there, I've got nothing else to price in this market to figure out a higher high, to figure out where to trade on a new all-time high situation. But I'm using this. This is the only thing I found, so this is better than nothing. You never trade without a plan. But by default in here, we have no plan, so we have to find something that gives us a bit of a perspective about where to trade on all-time highs. I would use Fibonacci extensions, and as we are in a final excessive structure with a wave 1 extended, normally the waves are supposed to shrink, which means this wave, this one, is supposed to be shorter than this one. So I'm going to use below 100% extensions. 61 and 76 or 88.6 are generally levels in which clusters can occur. So as you can see, the 61, well, doesn't really look like a thing to me. but it might be over the 76, 78. So either today we're going to reject the third range boundary and we're going to enter bear market territory later on, because I think we're going to break this support as immediately, or this is just nothing. We just had a bit of a volatility and we're going to surge over the next few weeks. And when I say surge, I don't think that 2 days from now we'll be there. I think most importantly it's going to take like another couple of weeks or even more than that to get to this 78% fib extension, where we're going to work again as experienced traders. Just to put it plain and simple, what does that mean? That means today we're going to go H1 chart time frame, or even 15-minute. I don't know where the third range boundary is going to be. Yeah, H1 time frame. So we finally reversed the fucking H1 time frame context. So either today we get to trade inside the resistant context today or tomorrow, and we sell the fucking crap, and in that perspective mean end of the game. I mean, we just go and we find the market top, and we're going to be able to put stop losses in here and short sell. Option number 2, what we just got in here is going to give us the 1-to-1 ratio to short sell the next time we get above the H4 context. And that would very likely be like, get out there, take a 1-to-1 ratio, and if we've got the required conditions to go against, which means reversal probabilities, we need cycle breakouts, and so on the H4 time frame. If we got it right, then we're going to start short selling again into this area. Experienced traders only, as usual. This is fucking reverse trading in a market that doesn't have enough volatility, okay? So I do everything I can to try finding some suitable patterns with definable risk limitations, but definitely understand that we're not going to take big position sizing any fucking how. It's way too dangerous, and most importantly, if you're not suitable for this, if you're not experienced enough, don't try going down this road. It's just simply not worth it, okay? So that's pretty much all about it. Caution on the stock market, caution on the crypto market, because I think quite some opportunities might emerge. But the Dogecoin situation really causes a big problem to me. This thing being the top 3 in market cap is definitely a big problem. But, well, I suggest you might just do as I did. You delete the motherfucking asset until it normalizes itself on its own. Normally, time does the job. But right now, everyone's thinking about a revolution, which actually turns out it could be right. Just don't get me wrong. You know my revolution system, in which a revolution follows a pattern. This pattern's always the same. First of all, it's stupid, then it's dangerous, and finally, it gets absolutely understood and accepted. So this is the 3-step cycle for a revolution to occur. Right now, has Dogecoin been stupid? Well, it turned out it has been since the beginning. So is Dogecoin stupid? Yes, it has been, and it still is. Now people are thinking it's getting to be dangerous, just like I do. I simply think it's dangerous for the entire crypto market because it just makes it stupid. I fear for contagion into the rest of the crypto market. So it has been stupid. Now everyone thinks it's dangerous, me included. I'm really questioning whether or not there will be adoption in the future. I still totally doubt it, but still, that's a possibility. So if you fight against this thing, you're dumb enough to just be a vigilante type of trader like I am. Just be smart enough to figure out this is a bias. You won't have a clear sight over the asset itself. Just try to be smarter than that, okay? So just trust me. If you feel like you want to fight against Dogecoin right now, that means you'll probably have a vigilante bias. Just get the fuck out of here, delete the asset, and let the DOMs trade it, okay? This is stupid, and as long as it is, stupidity has no boundary. It has no limitation. It's infinitely dumb and can get much dumber than that. Just stop trading it, okay? That being said, see you guys. We'll see each other this afternoon. Remember, this is Wednesday, so trading session, live trading session this afternoon.